in the markets today. Ladies and gentlemen, it's been a couple weeks. We got Sam. How you doing, man?
It's a couple weeks. Wasn't that like last Wednesday?
Were you on last Wednesday? Did we do an earnings together?
Was that Nvidia earnings?
No, yeah, you were on Nvidia. I forgot.
Yeah, don't worry. I was Jensen Wong. Hey, nice shirt. Reminds me of a Venezuelan president that got taken out. He got the Nike wear.
By the way, Sam, you left the "don't add yet" on your name.
I did. All right. Well, don't add me then.
Sam is so professional. He'll like write "don't add yet" while he's getting ready, and I'll like see it immediately. Yeah. Like, oh, I know not to add him, but
okay. Yeah. Thank you for that. Wow, right, what a day.
What do you think what happened today, in your opinion, when it came to the markets?
I mean, the market got hit with like a million things. You had Block CEO. All right. We already know who he is and everything. Everyone saw the news. Lay off 40% of its staff. And he put inside, it was because of AI, whatever. And then other people on Twitter are basically saying like, wait, he had like a $68 million party just last September.
He did.
So he's like kind of making up for it. And like he just throws these crazy parties and he's using salaries to pay for that. And then other people are saying it's because of the bloat that he hired during COVID, which is probably all of that. And Jam and Ball actually wrote an interesting article today. I don't know if you read Clouded Judgment by him on his Substack. But he basically said it's all of it, right? Now, Altimeter has like their cases, for everything. But so far from what I've heard from CEOs and stuff is that this is like really overblown, right? But generally speaking, we heard that Jensen Wong just said that on Wednesday, right? And he even said the next day on Bloomberg and everything. So it's probably everything. But you know how the market is. They hear everything all at once and they think like, oh my goodness. So like, let's sell off software after a massive bounce yesterday.
Yeah.
And then on top of that, you had other things happen in the news, in the market. You had the CoreWeave earnings. Basically, they did not do good in earnings whatsoever. They slowed down growth. Their margins contracted and have the worst thing you could possibly hear. Even though, the ARR numbers sound really good, it's like close to $30 billion, but the market doesn't care about that anymore with them because they know there's a lot of overhang risk with OpenAI. And I believe today, I don't have access to a Bloomberg, but I was reading somewhere that Oracle credit spreads are at its widest since 2009. So like they got even wider than they had before. So there's obviously a lot of risk in the market. And I don't think the additional raise $110 billion OpenAI really helps the situation. But that's just like fueling the fire, right?
Well, why do you think Nvidia got hit as bad as it got hit today?
That's the weirdest thing. I think the market just doesn't believe them, but it could be algos, right? Like we've seen the last earnings, the same thing happened. And then Nvidia went into the earnings around $200 or close to $200. And we kind of saw the same thing happen today, but I can't, I wish I could explain it. I really wish I could. But I think it's just a bit more of the rotation into defensive still. And if it takes selling part of a $5 trillion company, close to $5 trillion company to add more fuel to other sectors, like XLV is up almost 2%, XLP is up 1.3%, XLE, XLU, like your classic defensives are up today. And in fact, even Google was up today, right? Google and Meta were up today, which is really weird. Google was up today. Meta was down 0.5%. Amazon's green today. It was like a mix of everything. And then the news that came in through the day, the SpaceX IPO that I mentioned, and then toward the end of the day, Trump's like saying that he's going to, I think a lot of it has to do with also people don't want to hold risk into the weekend because they know that the narrative could just change. But yeah.
I agree as well. I think the risk into the weekend was, it was around 130, 140, and we were still falling. And usually throughout the day, you kind of bottom out around 1145, 1230. We were close to the end of the day and just water falling down. And when a company puts up 80% growth and trades at 15 times earnings and gets hit this bad, it does feel like sentiment's a little bit shifting, even though sentiment has been bad all year. Do you also think the private credit concerns today catapulted banks at their worst day since April? Is that also part of the reason why got sold off?
Yeah, if financials fall, that's just a red alert sound to the market saying that, like, look, we have like serious economic issues, right? So if you have like JP Morgan, Bank of America, and all that stuff falling like 3-4%, the XLF, I don't know if you look at the moving averages for that, it's like the chart just looks terrible, and you can't have a sustainable rally without financials taking part of it, but especially without tech. Like, so if those two things fall, which I'm still surprised, like, wow, the NASDAQ actually led the market today, or it outperformed the market today, but it's understandable why IWM was down, since it's made of a bunch of banks, regional banks, large banks, and everything. You know, it's understandable why IWM is down. And IWM really has had a sustainable bull run this year so far.
Yeah.
So the fact that that was down big today, like 2%, you know, probably means a little bit of risk off environment. Nvidia down 4% certainly does not help anything.
I agree. Small caps getting hit, SaaS, Fintech, semis, I mean, across the board. These were the top names trading the options market today. Nvidia and Netflix were number 1 and 2. Then you got Tesla, Apple, Microsoft. What is your thoughts on the Netflix? I mean, did you play that at all, or?
No, I didn't play it. I know some people who played it. I also know someone on Twitter who everyone probably knows. He got in like 5-cent calls for Netflix this week.
Who?
That guy, Sam something. He like wears a suit, brown skin.
Oh,
he
that
like
dude.
Always types in the irregular sentences like all the time on purpose or whatever. It's just like some people nailed this stuff, and even
5-cent calls.
Yeah, like 5 cents, $5, right? So
no, his strike was 5.
His strike was, I think, $90 or something.
Oh, then yeah, then
they were like 5 cents, and he bought them like a day or two ago. Like, he's just, you would. I was even looking to Poly Markets earlier this week, and it said Netflix had a 45% chance of still taking over. So no one saw it. No one saw it coming. And yeah, dude, Netflix is like the most bullish chart ending the week.
Yeah,
it's pretty insane. Like, I just posted it had its largest volume today since January 2024. And of course, the largest weekly volume since then. And on the chart, it broke back up almost all the moving averages except for the 50-day, and broke back above the 9 and 21 EMA. Like, it's wild, man. Like, they rushed into Netflix because they're basically getting a $3 billion check for doing nothing. Doing nothing.
No, and you know, this when this got to 70, it was trading at 25 times forward, which
never has.
Which it never has, right? It's historically usually 45. So I think that's also part of the reason why people got excited. Retail definitely loaded up heavy on this one.
Oh yeah.
Retail also loaded up on Nvidia. So this stat we talked about yesterday, but Thursday morning, individual investors bought 360 million of Nvidia in the first 80 minutes of trading. The daily average over the past 5 sessions was 94 million. So we're talking about a 4x increase there. Do you think retail is getting too excited to buy the dip? And do you think the institutions are going to win this time, even though retail won last April?
Well, I mean, I have some data to back it up, but retail is definitely trying to buy the dip in things that have worked for 3 years. And we've seen the data for it. And fund managers, according to the NAIM exposure index, I posted about that one this morning, is at its lowest level since May of 2025. And the S&P 500 was 15% lower than where it is today. Yeah. So there's obviously a lot of deleveraging with fund managers, and consistent deleveraging, because that's been happening for the last 3 or 4 weeks. And it would appear from my feed, as well as some Bank of America stuff that I've seen, is that, yeah, retail is trying to buy the dip hard on a lot of tech stocks. And when it doesn't work, you see it fall off, right? And it's not like paper hands or anything. It's because like some of them are buying like near or at the money call options, which basically go to zero the next day when the stock is down 2 or 3%. And you have these, it props the price up when they all buy it before the event because of the gamma squeeze, right? So if all of these retail people are buying call options, the market makers or the dealers have to buy shares of Nvidia, 100 shares to each equivalent contract, as collateral when they sell that call option to retail. So that pushes the stock up, especially when you get an event coming up. Like we've seen what happened with Tesla. Tesla was popular for doing this back in 2021, 2020, right? So that's kind of what you're seeing, this huge volatility move, but also like, dude, the market participation is insane. Like retail is doing some crazy moves on the market. Like we can move the market. We really could. The problem is that that's been working to the upside for a long time. And I feel like right now, a lot of what we're seeing with high beta and high growth is just massive deleveraging and margin calls with retail. And It's probably going to stop at some point.
We've been saying that for the past couple of weeks. Margin calls, leverage. Like, do you think there's something more structural here, or is it that simple that's the...
Well, it's like I mentioned, it's also the deleveraging of fund managers. You've seen it last quarter in 13Fs. You see it with the NAIM exposure index. And honestly, I'm not like trying to catch knives here. And I'm sure a lot of people are not doing that as much anymore. And I think that will probably explain the reason why we've just been in trading this massive range since October, right? Like everyone had their faces ripped off to the downside in October 9 or in October 10, whichever that day was that Trump was tweeting all that stuff. And since then, it has just been brutal, right? Wow. If you've been investing in high beta, high growth, and I have myself too, like it's been like a roller coaster, especially this year. Like it's just been insane. And then the crazy part is literally that you have 4 sectors of the S&P 500 or 5 sectors that are up like 20, 30% year to date.
Yeah.
And just now you're starting to see the pullback in SanDisk, Micron, Citron, right? Not Citrine. Yeah. They open up their short in SanDisk, which we don't even know if they have open yet still, but dude, I don't know, man. This market's wild. It's definitely not an easy market as it had been for quite some time.
How are you managing the Nebius Iran data center stuff? Do you want to get less exposure, lean into it? Or what do you think?
Yes. So I did it last week. I sold my Iran position and I've even posted about it too. So it shouldn't really come as any surprise. And of course, I'm keeping my Nebius position because this sector is very risky right now, right? Especially with everything you're seeing with the CoreWeave, and it's probably not going to spread to Iran and Nebius because they're very much like full stack. They're pretty diversified, or at least Iran's going to get even more diversified with their full stack as well. Nebius is the most diverse out of all of them, which is the reason why I like it the most. And that's when I was in first. And it's probably going to continue until we see things kind of settle down. I don't know when that is. So if I'm going to do this, I'll probably get back into Iran like when things start settling down. But until then, like now for me is just not the time to be trying to call the bottoms, trying to play long upside margin calls and everything. Like not margin calls, but like margin and calls.
Yeah.
Like it just does not, I'm not an active trader. Like I might throw something on like every other day or something. Right. But like very small risk size, but dude, that I feel like that time is just, it slapped you in the face if you're doing that in the beginning of the year. And this year, it's not rewarding to do it as much as it had been.
Yeah, the EOSEs of the world, the T1s. I mean, those
dude.
They're in the same bucket of Iran and Nebius. Iran and Nebius, I think, are more high quality, but they're all high beta growth.
Yeah. Who would ever have thought that was going to happen like all at once? Like there are so many people talking about EOSE on Twitter. And for a minute, I felt like I was going to miss the boat because I had traded that in the past and, just like left it behind because I've learned my lesson trying to chase stuff. And it had that crazy day yesterday, like down 40%. Handed though, from a fundamental perspective, like that was much well-deserved from what I read about management. But T1 Energy,
it's also a lot of everything that worked in January is not really working anymore. Like ASTS was up 64%.
Yeah, that's wild.
It's now down 37% from that 64%. Yeah. I mean, and there's many, many examples of the things that were pumped up in January, like pumped up to the moon in January. I mean, very few of them have actually held out and, maybe they get the rebound in March, but do you think the high beta growth kind of topped out, at least in the short term for January, and now it's in digestion?
They all like topped out. A lot of them topped out in October. You could see a lot of these charts, they have not recovered since early October before that massive deleveraging event. And they have not, like certain stocks have, obviously ASTS, Rocket Lab and all that stuff. They've recovered, but they've dramatically pulled back. But if you look at some charts, man, a lot of these charts have not even come close to their top since October. And since then, it has just been a disaster for a lot of these high beta stocks. And I feel like that was like a massive warning to a lot of people who are playing that on the long side. And if you didn't listen, then you're probably like trying to claw back, trying to claw back to make up for it in some other ways. And some people probably have and who rotated, but the market is kind of saying right now that it's not favorable. So I don't feel the need to try to dive into that, trying to catch that knife. It doesn't seem like it is. You would think that with a SpaceX $1.75 trillion IPO next month, or as always next month. Yeah, you would think it would, but it didn't really do anything. It just, certain things went up after that, like DXYZ, the Destiny one that has some SpaceX in it, I believe, was up. I guess that would explain why Google was up today. As soon as we saw that announcement, say I think they own like 8% of SpaceX, if I'm not mistaken, or something like that. Maybe it's 8% of their portfolio. I forgot, but they own a lot of SpaceX.
Do you also think a lot of this pain is just it's February? Is that enough of a reason, or you think it's deeper than that?
This could probably continue from a seasonality perspective. This could probably continue into early April, just like what we saw last year. I wouldn't be surprised if it did, only because like we've basically gone straight up for a while. And if you just look at the SPY chart, like it is literally just consolidation. Like there's nothing more to say. Under the hood, obviously things are way worse. Max 7 is just pulled back dramatically. A lot of these software stocks,
imagine March is worse than February.
Dude,
that's what happened last year, right?
Yeah, I got murdered pretty bad last year, and I imagine a lot of people did. And I don't want to make that mistake again. So just being prudent and careful, like where I'm buying dips and stuff, and like buying recovery versus like falling knives is really helped me avoid a lot of things lately. And who knows? I mean, maybe it might bounce back, but it's very difficult on an emotional perspective to like kind of. I've been so conditioned to do something for the last 3 years, like buy dips, buy dips, buy dips.
Yeah.
And it's like the couple of times after the dips don't get bought, you think like, oh, okay, let me just try one more shot. And then like at a certain point, I'm just like, I can't, this is not working anymore. Right. And I feel like people are starting to understand that. And then now you're starting to get the sense that the rotation is happening under the blanket. And that's why you're starting to see these leaders this year so far in terms of sectors are continuing to lead. And we've seen that happen time and time over again for 3 years, but maybe it's just not happening with tech or high beta anymore. And that's perfectly fine. I mean, this is still a bull market, right? Like we aren't in a bear market right now.
Well, that's also why I think it's, yes, the conditioning of buying the dip has been tough, especially on names that, either the fundamentals aren't there, but they used to go up, so people conditioned to buy it and got hit, or the multiple is just way too aggressive. Having said that, it doesn't feel like we're in 20% 2022 market correction territory when Nvidia is at 16 times. And does that give you any level of solace that the biggest companies in the world are affordable in terms of their multiples, and therefore we shouldn't see, an April of 2025 type of scenario again?
I mean, I'm just staying cautious, and the reason why is because multiples, especially on a price to earnings forward perspective, can seem cheap, but they usually seem cheap at peaks, right? So I don't know if this is a peak, but the market certainly doesn't care about its multiple. It isn't like, whoa, Nvidia is cheaper than S&P 500. We need to buy this thing up. Like, no, it doesn't care. And I'm going to put my ear in the ground and just listen to it and wait until that recovery does happen. But if you think about it, right now, Nvidia is growing at high double digits in terms of earnings or bottom line, right? If that starts to slow down, which it already has, but like starts to slow down a little bit worse than the market expects, which is surprising because they certainly did not last quarter. I think that's what the market's waiting for, or at least it thinks it's going to happen. And you would think that because of the surprise, if we head into Nvidia earnings and Nvidia was like 170, it probably would have rallied, right? But there was so much optimism heading into the earnings that even though they showed up, you still did not get any type of appreciation from that. It was more like, we still don't believe you sort of thing, which is just, it's crazy. Like I've never seen this happen in the market before. But then again, this isn't a normal market nowadays.
How do you make sense of SoFi and the fintech collapse?
It's a continual just downtrend with this. I think this, I honestly, I would think that this has a lot more to do with the liquidity in the system. I mean, this morning's inflation print certainly does not help. Even though rates come down, these companies, from the amount of money that they loan, as far as that spread goes, they do make money off it, but from a positioning and sentiment perspective, if you're not having liquidity expansion, these companies are not doing good. And they are the most sensitive when you think about high growth, because not only are they also high growth, like shit for TT, not TTD, shit for grab.
You say shit for?
Shit, yeah, shit for. I mean, it kind of is right now, you know, but anyways, I mean, I don't mean to harp on that company. Like, it is a great company, but dude, that thing is like, I just looked at today, down 9%. Like, this is crazy, you know, and Shopify still holding up there. Toast is just arguably a really well-run company and does good in the bottom line too. Like, they're probably, but nope, they're just getting sold off. You know, a lot of these companies, I don't even need to talk about SoFi, Pagaya as well, but like, these are more of like the speculative.
But do you think this is lending fears for the banks?
Probably do it lending fears, because if you think about credit and the fact that they had that 10% cap, it kind of pushes a lot of people out of the equation in terms of credit, and then makes them tighten. Like, just from a subconscious level, they're a little bit more conscious of their spending and their borrowing. And that's probably the reason why you see Affirm's down, which is a massive buy and pay later. PayPal's down, not necessarily a buy and pay later, but they do have that product available. Credit or Klarna's down a lot. Like, they're like more than 50% below their IPO level. I think that's just kind of what the market's saying. And then when you think of like the hoods and the Coinbase stuff, like, that's falling the price of crypto. So, you know, I think there was a catch down with Hood today after crypto kind of rejected that 70K level and pulled back. But a lot of that really just has to do with the comfort or the consumer confidence. The consumer confidence is there with high net worth, but it's not there with lower bottom middle class. And, you know, people like ourselves, we basically have to pay all the taxes. So,
and we are getting ready to pay a lot of taxes. Sam's Twitter right there, folks. You guys can follow him on X. Please make sure to follow him. I'll put his YouTube as well in the chat. We got this clip from Trump, Sam. Let's take a look at this, and then we'll react to it as well.
Well, they're going. I mean, we're negotiating right now, but they're not getting to the right answer. And we're not going to see people. We're not going to see what's happened for 47 years keep going. 47 years we've been doing this with them. The Obama deal was the worst deal. Nobody ever saw a deal so stupid. Right now, if you did the Obama deal, if that held, if I didn't terminate it, Red would have a nuclear weapon, and it would be a whole different ballgame. That Obama deal was one of the worst, one of the dumbest deals I've ever seen. First of all, it was very short term. It would long be over. You know that. Would be not. I terminated it, but if I didn't, it would be over by now anyway. But the Obama deal, what he did was one of the dumber deals. I've seen a lot of dumb deals. That would be one of the dumber deals.
He is in Texas right now. Sam, I know you're not a super big geopolitical expert, but in general, how do you think markets would react if we struck Iran?
I don't think that they would care. I think they care about the anticipation of it, but I don't think they'd care, because we've seen time and time again that it didn't escalate into anything. And we clearly saw that the last time we attacked Iran. And I think the market knows that. I don't see the fear being there for that, mostly because we've seen it escalate, and like, it just doesn't, the market's moved up on the escalation. It's moved down on escalation. Like, I don't think it cares about it. You know, obviously that's a bad situation. You know, I would not want to see that happen. That'd be crazy. But yeah, as far as the market goes, I don't think it necessarily cares. And it's funny because like, now it cares about inflation. You know, I guess this is just like a really weird market to read. And I personally just stopped trying to figure it out, or I've tried to stop figuring out. That's why like I'm giving you a lot of I don't knows with this, because one, I don't know, and I don't want to lie and say that I know. But two, I feel like the technicals speak a lot better when it comes to performance or relative performance in the market. And I think that speaks volumes toward what's happening. Dude, did you see that? Did you see that photonic company AAOI up like 50% today? Like, what is happening here, man? Like, semis are leading apparently, but not in all of them.
Well, I also think a lot of small caps are getting pumped, and I mean, part of it could be actual earnings growth. Part of it could also be momentum and hype. I really don't know.
Yeah. But so there's this company called Comfort Systems. You probably heard of the ticker FIX. Yeah. So their story, I was reading about them earlier this week, and their story is that they're just a standard air conditioning company. Sorry if I already talked about this. I forget if I talked about this on Wednesday, but they're just a regular air conditioning company. They build air conditioner systems and central air systems for schools, you know, small businesses or whatever. And then they got tapped to like build some like data center HVAC systems, which they had in the past. But like they're seeing that sector of their business, that segment of the business just exploding. And that has brought them so much business. But I think more importantly is that management is able to sustain that and able to basically help that growth in that way, that they're able to handle all these customers and build on their backlog and keep their promises and everything. So the bottom line earnings is going through the roof for this company based on easy comps, but also their guides are just insane. And that's probably the reason why these companies are running, is because you have these businesses that's been around for decades, which is basically flat earnings growth, flat growth on the top line and everything. And all of a sudden they're exploding. The market's chasing these companies. And I don't know if, I personally would expect the memory story to continue.
Yeah.
But you're seeing like a little bit of consolidation on it, like not like falling off the cliff, you know, they've gone vertical. But I still do think that this theme with the secondary or second derivative semiconductor plays when it comes to wafers, semiconductor supply chain, I still do think that's the theme of this year. And it's not so much like the fabless designers, like the Nvidia, the AMDs, Broadcoms, ASICs designers and everything, which is probably the reason why you're not seeing like Amazon catch a massive bid or Marvell Technology catch a massive bid, or even Broadcom either. And it's all like spreading out to other parts of the semiconductor supply chain.
Yeah.
Right. So I feel like that is kind of where I want to look in. That's where I've been trying to look in. And what had worked before, where it was like bet on the speculative companies and they're going to like 10 bag in like a couple of months, like that isn't necessarily working anymore. So it's about finding the companies that are more in like the ones that are not mentioned in the markets. And you can even find it like on ChatGPT or like whatever Stock Talk says when he says that. But a lot of people do use that type of research, is like asking what are the vendors for this company, right? And just like ask it in AI, whatever model you pick. I mean, they're all sourcing from basically the same places on the internet. But like ask those questions, listen to some earning calls like Perplexity Finance. Like you can literally ask it a question based on the transcript and like see if like any names are picked out. And then like look up those names, see what's publicly traded, take a look at it, like all that stuff. Like I feel like that's kind of where the edge is right now in the market. And if you figure that out, you can see that some of these companies have actually performed pretty well.
So you would not want to rotate to like a Verizon, for example. You'd rather try to find smaller cap names inside of the semiconductor supply chain ecosystem that the market realizes are crucial to like this AI build out happening. Is that?
Yeah, well, it would be about figuring it out before the market figures it out. And I have snatched a couple of them, and obviously everyone knows what Amcor is, and I would have never figured that one would have never came on my radar. But when I started looking this thing up, you know, obviously we're from Stock Talk, but like when I started doing my research on it, I was like, holy crap, this actually makes a lot of sense here. And then on semiconductor, and I still do think a few of these semiconductor plays would continue, but like I'm really trying to find the ones that are not discovered yet, or the ones that don't have parabolic charts yet. Like Silicon Motion, like its chart looks better here today than where it did the other week. And it would complement a continued trend. It's SIMO. And that has to do with more of the NAND technology side as far as being a supplier for that one. Also ACLS, which obviously did not have good earnings. That would, I'm looking at the charts, and if it's holding the 200-day moving average, so the charts matter in that one. But you know, these are ones where I'm like kind of taking a look in, you know, maybe obviously things don't really turn out too well when you pick certain things, and like chasing parabolic charts certainly doesn't help, especially chasing them. So I've learned to be a bit more patient when it comes to this stuff. Like I was looking at adding back into SIMO or SIMO, and I saw it yesterday. I'm like, really? Like I stopped myself out at the worst possible time, and then look at it today. It's down the last couple of days back to where I exited. But I want to be a little bit more patient with this one, mostly because when I see the market kind of like falling off a cliff right now, like it's probably going to bounce. Like we've been in this like massive range since October, and it's probably going to continue that trend until like the leading sectors actually fall off too.
Right, because the utilities and I mean so many leading sectors have gone up.
Yeah, a lot of them have. Yeah.
So and that's what's kind of helped the S&P hold its level. So you're not really rotating into like deep value Adobe, PayPal stuff. You're trying to find alpha and growth just in games, essentially.
I'm not. It's just I know Chris is about that stuff, and he's very successful doing it, especially with Verizon. Like, geez, like people thought that they were late with Verizon when I was at $40, and like they're definitely not late anymore. They were not late if they got in then. You know, like these kind of things they've been working they've been working for the last few months, and that trend's probably going to continue. But like, that's not a sustainable trend. That's just the risk off trend, right? Like, I want to be part of the juice of the bull market, and it is really in technology, and that is my specialty. Like, I'm not too prudent when it comes to like reading debt, like, or renewing of debt over a period of time, like the thesis for the cruise lines that Chris had. I'm not good at that stuff. And for me personally, for myself, like figuring out like the kind of person I am, it's got to be central around tech, and it's got to be central around a bull market, right? And a bull market today is about AI. So trying to figure out like what people are not really talking about that might be something later on. And I don't want to pick stuff out of Stock Talk's book or anything, because I'm trying not to follow too closely, because then that'll make me biased. But there are a lot of names out there that probably have a lot more upside than expected, that if you look at the charts, it doesn't look like these are suffering as much as other semiconductor stocks are suffering.
Yeah.
Right. So like looking at supply chain, trying to figure it out. I'm still trying to dig in, but I mean, I haven't really been too active lately, mostly because, dude, like, I don't want to be active in this environment, because what if I get in and something like ACLS and it's like very close to stopping me out, and it ends up being something good, right? So just because you have a 20% pullback doesn't mean the game is over. It just means that it's going back and basing out at the 200-day moving average again. Like, what if that sort of stuff is happening? And that's the reason why I'm not trying to fire too many bullets all at once, because of that, right? Because you could very easily in this market, you can stop yourself out in one day if that is your thing, to kind of perfect the timing. And then the next day, it's a massive fake out or a shakeout, and it just rips back up. That's happened so many times in so many companies lately.
It's happened like 3 times this month, even though we're still red.
Yeah, we saw Rocket Lab and ASTS just earlier in January. Like, that sort of stuff can happen, and it's been happening for a while, but that's less chance of that happening if it's not like a popular name on Twitter or on Wall Street, right? Because usually with those mid cap, small cap names, they tend to just trend up for a period of time, like years or months. And some of the charts show you that, but some of them are extremely volatile, even though they're a small cap, like OSS is just a super volatile shakeout stock. And it's always pulled back, and it's always like caught people to not get in, because it's like, oh, it's going to go lower. And then like out of nowhere, it just shoots up. So, like those kind of stocks, like those are the ones that I'm trying to find. And, building the confidence in this game really takes a lot of just executing your own research, and not just like taking ideas from people, right? Like you can hear an idea about a stock, but like not doing the research on your own and just getting in something, like you just absolutely get shaken out if the price drops.
And I also think in a market environment where the game is not as easy as it was, finding that $3-4 billion company that could potentially become a $7-8 billion company, it's tougher. But not only is it tougher, if we actually do get the pullback, the real correction, those names, it's tough for them to. We haven't had that real correction yet outside of high beta growth.
There's so much doom porn on Twitter. I try not to, but like, there's a reason why they attract so much engagement. Is because it's just like, it's a drug, just like watching these things, right? Especially when it's near the bottom. Like the message that they send out is like so powerful that it's like your recency bias is just trying to attach to it an emotional level. It's like, I'm trying not to let these thoughts run through my head, but like when you see the account go down, your brain kind of gets desperate, because it just like want to protect. It wants to heal itself from getting financially damaged. It's just like, this market is probably the most emotional tied market I've seen this year than the last 3 years, where everything was just working. Like 2022 was just like a gut punching, like confidence killer the whole year. Like, it didn't seem like there was a lot of back and forth, whatever. It was just like, this is not coming back until like we figure out something over here. But this year has been like, we're back, we're not back. We're back, we're not back.
All right. Sam, thank you for joining. There's Sam's YouTube right there in the chat, and his Twitter. Please make sure to subscribe and follow. He goes live every day at 2:45 p.m. Eastern, an hour before the market close.
Yep.
So you can check him out on his show.
And also one more thing is that I actually interviewed a CEO of a company today.
Ooh.
I don't want to say the name. Yeah. I don't want to say. I'll drop the hint tomorrow when I post it. But I don't want to say the name, but I think some people probably know what it is, and I don't want people to guess because I don't want to say what it is. But I've already gotten the clearance to post it, so I'm going to post it tomorrow morning. Just have to edit it a little bit. Not really too much editing, but just add something like an intro, an outro, or a B clip, whatever that thing is called. But yeah, I'm going to post it tomorrow on my Twitter and also my YouTube. So just like want people to keep a lookout for that one. It was a great interview. It was the first time I ever interviewed a CEO. So
congrats, man. How long is it?
Yeah. I think it's like 30 minutes. It was actually supposed to be like 15, 20 minutes. It ended up being 30 minutes because the guy's pretty down to earth. I'm not going to lie. He's a pretty cool guy. I guess I might have.
Is it a stock that a lot of people own?
I don't know, man. I don't know.
All right, he's building suspense. Yeah. I'm going to be excited tomorrow. All right.
Yeah.
Sam, thank you. There's YouTube right there.
Appreciate it, man.
Later.
Take care.